Yeah, thank you very much, Manuel, and thank you very much, the whole Frankfurt Blockchain Center, for hosting the Crypto Asset Conference, especially in these times. I'm Michael Duttlinger. I'm the CEO and co-founder of Cashlink. And today we heard it as in probably any talk about tokenization, it's always about cost disruption. We heard it in the talk before, that one major benefit or major aspect of tokenization is the reduction of costs of the two systems. So we have the capital market 1.0 and we have the capital market 2.0. And now everything is kind of changing from capital market 1.0 to capital market 2.0. So we have a completely new value chain. We have completely new players coming in. The players from the existing value chains are transforming, and some players will have different roles. For example, banks or investment platforms are now paying agents. We see that also on the custodian sides, it's switching. We might have not a CSD anymore. So there's a lot of happening. And one major driver is the cost disruption in this issuance market. First of all, a few words about Cashlink. Cashlink, we are Frankfurt-based fintech company. We are enabling the tokenization of assets and securities for banks and investment platforms. So we've built an all-in-one solution for the tokenization of assets, and we're providing all the needed licenses and technology that, for example, banks and investment platforms can work with tokenized securities and tokenized assets. We're on the lowest layer, so you probably don't see us when you're using our software, because we are providing a completely white label software as a service solution, and we have one of the pioneers in the tokenization space. So we have tokenized the first profit participation right in Germany for a digital company share, and we have tokenized the first DAX stock as a certificate with the Bankhaus Scheich. And last week there was also some kind of digital company share issued by Tomorrow Bank, which is the biggest issuance of a digital security in Germany so far, which is based on our technology as well. And by using tokenization, we heard it before, we have a lot of benefits. Apart from the cost benefits, you get less intermediaries, you get the whole process digitized, the whole process is now digitized, and you have complete end-to-end flow covering all the whole value chain of digital securities. And now, going more into details on our cost study. So we looked into more detail, looked at the old value chain, we looked at the new value chain, and we did a real deep dive on what are the cost savings in each aspect. And what's very important here, what we found out is it's not that easy to answer. We have identified in almost any case there's cost reductions, but the degree of cost reduction totally depends on the setup. Because issuing security is not a standardized setup, it's totally different in any case. So for example, sometimes you have investment platforms issuing securities, you have the banks issuing, you have different distribution channels, you have different ways of custody of the real securities. So the real cost reduction on your case, if you want to calculate it, totally depends on the setup. So that's why in our case, we said, let's focus on one specific setup. First, overall, we find out that there are major cost reduction savings. So if you're looking at the whole value chain, so the total cost of savings can be between 35% and 65%, depending on the setup. And this is only, like I said, the cost reduction. So there are way more other advantages of digital securities, easy transferable and unlocking liquidity for previously liquid asset and so on. But here we're only focusing on the cost side. So what we're seeing here now, so basically it's just way more efficient to use tokenized securities and tokenized assets compared to the traditional world. We looked at one specific case, which is a 50 million euro bond with, let's say, 3,000 investors with an average assets under custody of around almost 17,000 euros. We have a percentage of transactions by investors, we have number of transactions, and we have a term of the bond of 7 years. So we looked at this specific case and looked at the whole value chain. We did this together with our partner Finoa, a custodian in Germany is operating and doing a lot of projects with us. So that way we could really focus on our part, which is the issuance of tokenized securities, and Finoa focused on their part, which is this custody of tokenized securities. By doing this, how did we do this? So first of all, we talked to our partner banks, our clients, our banks, about their experiences with the cost in the traditional value chain. We talked with investment bankers, we talked with exchanges, and of course, when you're looking, for example, at the pricing sheet of Clearstream, the central security depository, I think it's around 150 pages. It's a monopoly structured setup here, and it's not like one easy price. You have at Spotify, central security depository prices are very complex, very complicated, and really depend on, again, the setup. And for us, this was also very interesting to see, because if you have such a complex pricing and it's also a monopoly structure from like a business perspective, this can't be an efficient system. If nobody really knows what they're paying for central security depositories, if it's very complicated, it's not transparent, these are for us very signals for an inefficient market. And of course, here it's only focused on Germany, so we focused by collecting the data here on Germany. So if you look at the first part of the value chain, the structuring and the legal part. In this case, there are for us no cost reductions, because so you can say the winners in the new Capital Market 2.0 are always the lawyers, because they can charge the same amount they charged back in the Capital Market 1.0. And there's no changes. Right now, we would even say, okay, it's very important when our clients ask us, okay, we want to run our tokenization project, we're highly recommending to work with experienced lawyers in tokenization, and we have very, very good lawyers in Germany who have accompanied the current issuance of digital securities, because of course also in this space there are learning effects, there are curves, and so you can save money by using experienced lawyers, and other lawyers have of course to get more into these new structured products. So here we have no cost reductions on this side. Now coming to the issuance, the primary market tokenization issuance or traditional issuance. Here we have savings up to 59%. We have basically now less intermediaries. We don't have a CSD anymore. No central. Now the securities are now stored or registered in a decentralized registry and not on a centralized registry. We have now the current issuance process at Clearstream still involves manual processes, so it's still not, it's kind of still the backend is not in the current last presentation we had this like post to email, and it's the same if you look at the issuance market, very manual processes. It's not digitized at all. So we have the front end of banks are completely digitized if you use your brokerage app. But if you're looking at the back end of the capital market infrastructure, it's still not even digitized. So now when you're looking about tokenized products, they are usually issued in a already digitalized environment. So this also reduces the costs compared to the traditional issuance we have in the market right now. Right now, if you look at the tokenization, it's mainly done by tokenizers like us. Regulation is now coming in. We have a new law for digital securities coming in place probably next year. And then we having a decentralized registry party who is who's going to be accountable for the registry management, which probably won't be Clearstream only then. So then we're coming to the custody part. And here also, it's really regarding which kind of process you're having for your customers. So if you're now issuing digital securities, if you're doing via an investment platform, for example, the question is, do you have an integrated broker or do you have an external broker for a custodian? So via brokers. So this totally depends, and you have here huge savings, because if you now want to integrate traditional custodians, they're really expensive. And the custodians on the tokenized sides are just, you can save a lot of costs by using them. Also, they are way much easier to integrate. Your integration costs of integrating a tokenized a custodian for tokenized assets, it's way more easier to integrate. So what we're seeing right now is, for example, a lot of banking apps, for example, they have two options. They have the option to integrate a traditional custodian solution for traditional securities, or they can integrate a tokenized custody for tokenized products. And it's way more easier to integrate the custodian for tokenized products. You can save a lot of costs just by looking at the whole value chain, because the costs for maintaining the custody is just lower than compared to traditional custodians. And here, setup fees are 80% cheaper. Recurring costs are less. So basically, like in any aspect of the pricing, it's favored to use a tokenized custodian. Then secondary market. This is probably the right now hardest part to evaluate, because there is no real secondary market right now. If you look at what happened last year, it totally focused on primary market. We had a lot of issuances of digital securities, and I think now next year is the year of the secondary market. We will see a lot of, because we have a lot of good initiatives, we have a lot of good, and also big corporates who are working on exchanges for digital securities and tokenized securities. And so still the pricing models of these exchanges for digital products are not final yet. So we can't incorporate the pricing model of secondary market, but there's one big aspect why the secondary market is better compared in cost-wise than the traditional issuances. And this is, you can easily transfer your asset from one person to another person. So the peer-to-peer transaction is now possible. If you now want to transfer your security from your bank to another bank, it's very complicated, and now you can really own your own asset. And in this case, if you own your own asset, you just have to pay the transactions fees of the underlying blockchain technology, and this is very cheap compared to the traditional transfer of securities. Sometimes it's about €10 per trade, and if you look at some blockchain infrastructures, it's only a few cents. So the main aspect here is you can now control your own asset, and you can directly peer-to-peer transfer your own asset. Still, looking at regulation, it's also not very clear what happens to tokenized securities regarding the trading on regulated exchanges. It's yet an unregulated market. There's a lot to come. And another thing. Also, you now can have direct access to exchanges and marketplaces, and you don't need the broker in between, which we have right now in the old system. And that's why the whole system gets more efficient, because everything is connected, and that's lowering the costs of transferring your security. Basically, when we look at different cases, we have between 42.6 and 65% of cost reductions. And what's now coming, when we're looking at the digital euro and we're looking at more efficient settlement processes, it's going to be even higher in the future. And we're just seeing here, we have a system with less intermediaries, less complexity. And that's what will drive the adoption of tokenized securities in the future a lot, because the players from the old capital market will just see the cost benefits on the new side, and we will have less players. We're not moving. When people say, okay, we're moving from a centralized system to a completely decentralized system, that's not what we're seeing. We're seeing that we're moving from a centralized system to a more decentralized system. We will still have centralized players in this new system. We will get rid of some intermediaries, but not of any intermediary. That's why, but now we have a more efficient system, less players, and the underlying technology is just cheaper because the current technology is built up over the last 40 years. And if you want to have the full report, scan to receive the full report, or just shoot us an email, and then you can have the full report on the cost reduction from us. And that's from my side. Thank you very much for your attention. If you want to know more about our solution and about our cost study, just contact us. And thank you very much, and enjoy the rest of the conference.